So there's one thing in your trading you're missing. It's understanding what's going on inside of Fair Value Gap. So in this video, we're going to be diving into the ATAS platform in so much detail, the bid, the ask, the volume, and how to find rejections in the market, like you see in the yellow box, which uses absorption and exhaustion principles. So with that being said, let's dive into it. So when it comes to using the ATAS platform, right, I'm going to break this down for traders so they can understand. So we're going to be going over how you could have taken this sell trade over here. But before we go onto the ATAS platform, let's take a little bit of context. So this is gold on the 15-minute time frame. So the 15-minute time frame is the most powerful time frame to look for trades, right? So very, very simply, if we break this market down in terms of how you could have traded it, I don't trade gold myself. What we had over here is we had a breaker structure, right? So structurally we're bullish, right? The reason we're bullish is because we have a structural low and we have a structural high. And so from here, that's kind of the step number one. Step number two is we're understanding our dealing range, being the dealing range low up to the dealing range high. So this here is going to be our dealing range. And so what's happened here, you can see with the yellow box, right? Prices come into a premium. So we've come above the 50% area. Now that we've come above the 50% area, we want to ask ourselves, where are the fair value gaps? And so it's really simple when you understand this, right? So we're above the 50% area and we also have a fair value gap. So in this case, the fair value gap is going to be resting over here. Let's label that in blue. So I'm typically looking for the candle or the series of candles before the fair value gap, right? Quick tip about fair value gaps. You're simply marking out the POI, which is different to the fair value gap, right? So the POI is typically going to be the last candle before the fair value gap, right? So I would have the POI drawn in this way, and this would be my fair value gap. So the question now becomes, how do we understand what's going on over here in price? So we're going to be breaking this down step by step, right? So let's see, we wicked above the POI and now we've come to the downside, right? So let's now quickly kind of look over what's going on. So the ATAS platform, my best friend, I always use the ATAS platform whenever I trade. So when we use the ATAS platform, right, we're typically looking at obviously candles and we're looking at candles, but we need to understand what is going on behind the candles, right? So if you trade the New York session, for example, right, this tool is going to be your best friend. If you trade the London session, this tool is going to be your best friend. If you trade even the Asian session, right, every single session uses buyers and sellers at key levels. So if you can understand what is going on between the buyers and the sellers, you can become profitable, right? It's as simple as that. So what is happening over here, if we look at this first kind of initial tap, which represents this over here, so let's make this nice and clear so that traders can understand, right? So we had our first mitigation into the zone. And so we're going to understand this from an order flow perspective, right? So we can see these couple of candles over here. We can see a couple of candles over here. Now, what's very interesting, so the ATAS platform, essentially, if we go into settings, I'm going to dissect this for traders who are using the ATAS platform. So if we go over to cluster settings, you want to understand what the markets in terms of the order flow is actually showing you. So we have the content, which represents bid, and it represents ask. This is very important. So the bid represents the left number, the right represents the ask number. So it's aggressive sellers versus aggressive buyers, right? This is super important to understand. Aggressive sellers versus aggressive buyers. So we're going to dive in and we're going to have a look at what's going on over here, right? So if we take a look at these couple of rejections over here, again, let's bring up the settings. So let's go to the cluster settings and let's see what we have. We have the bid and we have the ask, and we have what we call the delta profile. So what does the delta mean? The delta is basically the right number minus the left number. So it is essentially the ask minus the bid. So if we take this over to the right now, let's see what we have. So we are looking at this candle over here, this green candle. We can see a lot of blue, blue, blue. So blue delta or positive delta represents more aggressive buyers than aggressive sellers, right? So we're looking at more aggressive buyers than aggressive sellers. Now, with that being said, when we see aggressive buyers and the market moves down like this, right, we can see over here, we see a lot of aggressive buyers and the market shot down. What that tells us, right, when we go back to candlesticks, or what that tells us from regular traders analysis, is that when we see a lot of aggressive buyers in this area and the market moves down, that means these buyers obviously haven't been rewarded. Because if we go back to our regular, just we look at it from a candlestick chart perspective, right, these buyers were obviously trying to break above the area. Now, what's even more interesting is that if we look at this red candle, by definition means the market for that candle closed below or lower than it opened, right? That's the basics of a red candle. But when we look into this red candle, we've seen a delta outlier. So even without going into the actual numbers, you can see a dark blue rectangle there, which basically means we call it a delta outlier. A delta outlier essentially refers to the fact that there's a very large difference between the aggressive buyers and sellers. In this case, it's a positive delta. So it's 18 for 128. So what does that mean? So that's roughly going to be about 6, 7, or even 8 times as many aggressive buyers as sellers, right? This is so important to understand. If you see significantly more aggressive buyers and sellers, but the market is failing to break above this zone, that is showing you that the buyers are struggling, right? That's important to understand. And only the ATAS platform can show you that. Now from here, we can see the same thing over here, right? We see another delta outlier over here. So these are the aggressive buyers, right? We see a lot of aggressive buyers. In this case, 27 for 111. So we see over 100 aggressive buyers, and we only see 27 aggressive sellers, right? This again is showing us that the market has aggressive buyers present, but they're struggling to be rewarded, right? Everything's about looking at the zone, right? So now let's go back to the candlestick charts and play price on. So we're seeing price kind of head up, and yes, we saw price wicking into the premium before heading lower. So we as traders want to be entering as close as we can towards the level, right? So we're looking for trades roughly in this band over here, this bandwidth. So I'm just going to label that in red. We're looking at the red area. And so the red area itself is very, very important. So if we're looking for trades, what we're looking for is we're looking for buyer absorption, right? So we're looking for buyers to fail. This is what we're looking for. So when we see buyers, right, how this translates into regular kind of trading terminology is we're looking for the ask to be significantly greater than the bid. Now, when we see the ask being significantly greater than the bid, this represents positive delta, right? This is positive delta. So positive delta just means that there's more aggressive buyers than there are sellers. So let's take this over now and let's bring our trusted friend back up, right? So what we're seeing over here is we're seeing the rejection, which represents this top candle over here. Let's make that clearer. So we're looking at the rejection and we're looking at that top candle. So when price comes into a fair value gap, in this case, we're looking for potential sells. If you're looking for potential sells, you want to see aggressive buyers fail. You want to see aggressive buyers fail. The reason that's so important is that when aggressive buyers fail, this means that passive sellers are in control. And it's the passive sellers that drive price down, right? That is the fundamentals of the entire market. And so if we just take a look, we've seen this wick before heading lower. So if we just go to the order flow footprint charts, we can see significant blue delta, right? We see delta outliers that are showing us that there's more aggressive buyers than sellers, right? 23 for 77. What does that mean, right? What does 23 for 77 actually mean? What does 33 for 79 mean? What does 17 for 52 mean? What does those 3 zeros at the top mean, right? So what does this mean in relation to this, right? That top candle. So we see delta, 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 delta. We see positive deltas, right? But the market was unable to sustain and break above the level. So what does that tell you about the level? That simply tells you that aggressive buyers have failed. And so when aggressive buyers have failed, you've seen that by the positive delta. What that means by default is that passive sellers are, let me spell that right. That's passive sellers are in control. And this is super important. So I'm just going to take a minute to explain this. So when you come into a fair value gap, right, what you're basically looking for is you want to see the absorption of buyers, right? So what we mean by absorption is the fact that there's no such thing as more buyers and sellers, right? More buyers and sellers, that's incorrect. What's actually happening is there's more passive sellers than those aggressive buyers, right? So when there's passive sellers sitting in this case a fair value gap, this is what determines your fair value gap. And so I want traders to really understand this, right? So if we let's kind of take this over to the side for a second, right? When you see the markets heading higher into a particular zone, right? Just like this, and then the market heads lower, you are looking in this region, right? So what you are looking for in this region is super, super interesting, right? Where you want to see a lot of market participants hitting the ask, right? But as the market does head higher, right? As the market heads higher, we are seeing a resistance forming, right? The market is struggling to break higher, and then we get a sudden break lower. So when you see this break lower, right, and you see a lot of aggressive buyers over here, right? These aggressive buyers simply represent the fact that the market is being held by passive sellers, right? So when the market stagnates and then when we see a break lower, right, these aggressive buyers have been absorbed, and this is what tells us that the market is going to head lower. This is what tells us that sellers are in control. This is what gives us indication that our fair value gaps or our breakers or our order blocks or our resistance levels are actually holding, right? It is the passive sellers that drive price lower, right? So that's what I want traders to understand. And so if we go back to now where we were before, we're seeing more aggressive buyers and sellers, right? But we see the market heading lower. So if we take a look at the retest, right, we're just basically studying how price action behaves in this region, right? So this is something I want traders to go and back test, right? Go and back test what's happening here. We've already back tested what's going on over here. Go and also back test what's going on over here, right? So again, what was going on over here? Let's take out our trusted friend, all right? So what was going on is we saw a break lower. So far the buyers have failed. And now when we see a retest back into the zone, we saw this retest over here. And so this retest was again super interesting, where we saw, I want to go over finished auctions, right? We want to go over 0 for 12 and 0 for 25, right? So what does that tell you as a trader, right? So 0 and 0, these 0 prints tell you that essentially there's no buyers, right? There's no aggressive buyers, right? Sorry, there's no sellers, right? There's no aggressive sellers. There's only aggressive buyers. So when you see blue delta, once again, right, aggressive buyers are trying to drive price higher and they fail, right? So that shows you that passive sellers are constantly in control. So over here, what we're seeing is we're seeing buyers fail, we're seeing buyers fail, we're seeing buyers fail. Even over here, we're seeing buyers fail. So we're seeing the buyers fail, and that is the reason the market dropped, right? Because we're seeing the negative delta, we're seeing the positive delta with no reward, right? So as the markets are tanking, right, you can see the market's tanking lower, you can see the market's tanking lower, right? The markets are tanking lower with positive delta, right? So you're seeing the markets head lower despite aggressive buyers being present. That shows you the buyers are failing, right? So you should be looking for sells because we're seeing who is in control of the market, right? So the way that I would trade this is I would have a stop around this region, and I'd have my stop, I'd have my entry around this region and have my stop over here. And so as the level has been validated, I would be happy to target low of day down here. So, but this particular video is more about understanding how to use the ATAS platform. And so once you have the ATAS platform kind of in your favor, you can see that you can, catch trades with greater precision. So this is one trade I wanted to go over. It is essentially the bearish scenario. If we go over to a bullish scenario, we see the same thing. So to give you some context, again, structurally we had a structural high, structural low, structural high. We had price giving a fair value gap over here. We're below the 50% area. So this here is our order block. And so we are going to understand what was going on over here, right? So I'm going to put this in green, right? So we are going to understand what was going on over here. Why does the markets move higher, right? So let's break this down. Again, let's get the ATAS platform up and let's go back and understand what was going on, right? So here we have the same price action as here, but we're going to be diving in and we're going to be dissecting what was going on inside of the green box, right? We're going to be dissecting what was going on inside of the green box, right? So we saw heavy movement to the downside, then we obviously saw some heavy movement to the upside. So what was going on in this region, right? How did price react over here? Okay, let us go down, right? So the ATAS platform, it's the same exact candles. Now I want traders to kind of see what was going on over here. Now from here, what we had, if we just take a look here, right? We saw this huge red candle with a large buyer, right? So this is showing you that aggressive buyers are attempting to obviously drive price higher. So we see 78 for 223, but you're looking now for seller absorption. So it's the opposite of what we were looking at before. So if you just take a look over here into this candle, right? What do you see inside of the fair value gap, right? Well, we see lots of red delta. Just over here, we see red delta, right? Red, 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 red. So we see a lot of red delta, right? But the market failed to actually break below the zone, right? The zone is just over here. So if the market fails to break below the zone, what does that tell you about the zone? Well, it tells you the zone is being supported by passive buyers in this case, right? Passive buyers, right? So what you're looking at is you're looking at aggressive sellers failing, and you're looking at these aggressive market buyers looking to step in, right? And this is what drives the market higher. So for those traders who are new to order flow, or you're not quite sure on how order flow works, I do have, I am offering obviously free one-to-one sessions that can help traders just understand volume and how to use it, right? So what we do, what we essentially focus on at Price Action Labs is we look at a simple process. It's kind of what you've seen over here, right? So what we looked for in trades in particular is we look for this. When price comes into fair value gaps, right, there's either two types of fair value gaps. We have bullish fair value gaps and we have, of course, bearish fair value gaps. These are the only two fair value gaps that you will have access to. And so when price comes into a fair value gap, how do you know what's going to happen, right? What gives you the confidence in the London or the New York session? What gives you the confidence as a trader to take buys or sells? So when price comes into this fair value gap, you can either take it long or you can either take it short. Likewise, when price comes into a bearish fair value gap, yes, you can take it short or you can take it long. So you need to really understand what's going on inside of the circled regions, right? So you've got to understand a couple of things, right? You need to understand three things, right? You need to understand bid versus ask. Yep, that's the first thing. You need to understand this concept of volume, and you need to understand the concept of delta. So these are the three things that are unraveled when you start using order flow footprint charts, right? So all the data that we've been through today, you can access using the ATAS platform. And so the ATAS platform will give you an indication as to what is going on inside of the candles, what's going on inside of the markets. And what it's giving you essentially is it's giving you the bid and the ask, the numbers, it's giving you the volume, and it's giving you the delta. So if you can combine these three things with your entry models, whether you're using ICT, smart money concepts, even things like EMAs, patterns, etc., these are the things that will set you apart as a trader and give you the edge to be consistent. And so that's what we do here at Price Action Labs. If you are interested, drop a comment in the comment section and I'll be more than happy to, either book you in for one-to-one or just answer any questions you may have. But until then, take care.